Hello and welcome again to this particular session, and now we are moving over to section 4. This section relates to loss of stock as well as loss of profit policy. In the second section in the first and second section we did lots of questions with respect to what we call loss of stock policy. Then in the third section we did loss of profit policy, and this question is related to simultaneous or concurrent case of loss of stock as well as loss of profit policy. So in this particular question, you will have to compute not only loss of stock policy claim, but also loss of profit policy claim also. Let's have a look over this particular question. Given to you, dial 101, trading profit and loss account for the year ended 31st of 12, 2015 is given. Calendar year is your accounting year. You are given trading and profit and loss account. You are given opening stock, purchases. You are also given manufacturing expenses, gross profit, correct? Sales and closing stock is also available with you. And then there are administrative expenses, selling expenses, financial expense. If you remember, your administrative expenses and financial expenses, as far as are concerned, these are considered as of standing nature. Administrative expenses and financial expenses are considered as of standing nature, but selling expenses are not considered as of standing nature. That means our total standing expenses will be equal to 2 lakh. Out of 2 lakh, 1 lakh 80 administrative and finance expense will be considered as standing expense. Correct? And the net profit of last year is also given. So as far as information with respect to last year is given, we have sales of last year, we have profits of last year, we have what we call standing charges of the last year. In case if we would need to compute gross profit rate of last year, we can find out easily. Further, it is given in the question that company had taken out a fire insurance policy for 3 lakh. Company had taken a fire insurance policy for 3 lakh. Fire policy always means loss of stock policy, and a loss of profit policy for 1 lakh, having an indemnity period of 6 months. So we have taken a loss of profit policy also. Having a indemnity period of 6 months means if after the date of fire, in the next 6 months, whatever loss of profit would take place, that will be covered by loss of stock policy, loss of a profit policy. Question says that fire occurred on 1/4/2016. Now, first of all, let me actually diagrammatically present the entire scenario of this particular question. We have already seen that this is the last year, and full-fledged information of the last year is given to you. This is your last year, which is starting on 1/1/2015 and ending on 31st of 12/2015. Everything is given. I have already told you, as far as information with respect to last year is concerned, your sales is equal to 10 lakh. It is clearly given in the question. Your net profit last year is 50,000. It is also given. Then standing charges. Standing charges of last year, I had just told you 80 plus 1 lakh. 1 lakh 80 will be considered as your standing charges. Correct? 1 lakh 80,000 will be your standing charges. This is the information of the last year. Now we come over to the current year. As far as current year is concerned, we have seen that current year is starting on 1/1/2016. And below question states that on 1/4/2016, date of fire, that means the fire took place. This is the date of fire. On this date, fire took place. So, from the beginning of the current year till the sorry, extremely, I'm not quite well today. Anyway, as far as date of fire is concerned, during these 3 months, it is given to you below that sales from 1/1/2016 till 31st of 3/2016, that means during this particular period, your sales amounted to 2,50,000. It is clearly given in the question. Also, your purchases during this period is equal to 3 lakh. It is also given in the question. And manufacturing expenses during this particular period, manufacturing expenses from the beginning till the date of fire is equal to 70,000. That is also given in the question. Further, question states that if fire occurred on 1/4/2016 at the premises and the entire stock was gutted. Entire stock was gutted. Gutted means gutter. That means entire stock was lost. Correct? With nil salvage value. There was no salvage value of the stock. Then net quarter sales, that is from 1/4/2016 till 30th of June 2016, was severely affected. Now question says that after the date of fire till 30th of June 2016, till 30th of June 2016, till 30th of June 2016, sales were severely affected. That means this is our disrupted period or disturbed period. This is our disturbed period. This is our disturbed period. And during this particular period, question says that during this particular period, sales from 1/4/2016 till 30th of June 2016 is equal to 87,500. That means during the disturbed period, our sales were only to the extent of 87,500. Correct? Further, you are given insured standing charges 50,000 and actual expenses incurred after the fire amounted to rupees 60,000. Actual expenses amounted to rupees 60,000. Is it clear to you or not? Actual expenses amounted to 60,000. Then we are given that the general trend of the industry shows an increase in sales by 15%. So increasing trend is also given with respect to sales. So increasing trend of sales is equal to 15% and decrease in gross profit by 5%. And gross profit is showing decreasing trend of 5%. This is also given. Now question says that ascertain the claim of stock and what we call loss of profit. This is what we are supposed to compute in this particular question. Is it clear to you or not? Yes, sir, we are. So in this question, here one important line is given. Insured standing charges is equal to 50,000. See, our standing charges are 1,80,000. Now out of that, 50,000 are insured. That means 1,30,000 uninsured standing charges are there. Is it clear to you or not? So this is the diagrammatic presentation of this particular question. Now I will solve this question for you. I need not require to look at the question because now we have framed the question here. So first of all, this question will have to be solved in two parts, isn't it or not? The part one is related to loss of stock policy. Loss of stock policy. This is one part of the question. So I will have to prepare memorandum trading account because trading account of the last year is already prepared. Memorandum trading account. In order to prepare the memorandum trading account, what I am supposed to do? First of all, I am going to write the opening stock. Now, memorandum trading account is being prepared for the period 1/1/2016, that is the beginning of the current year, till the date of fire, which is 31st of March 2016 or 1/4/2016, whatever you may like to write. Now, opening stock, last year's closing stock is 90,000. That will become what we call opening stock, 90,000. Then we have already seen that sales in this period is equal to 2,50,000. So I will write the amount of sales, 2,50,000. This is the amount of sales which we have written. Now, purchases during this particular period, from the beginning of the current year till the date of fire, purchases is equal to 3 lakh. So I will write 3 lakh. Besides that, manufacturing expenses are also there to the extent of 70,000. So I will write manufacturing expenses 70,000. Now I have to find out the closing stock on the date of fire. Obviously, this will be two balancing figure. So I must have the gross profit. Now see here. What is your gross profit rate of last year? You can find out your gross profit rate of last year. Remember one thing, in order to compute the gross profit rate of the last year for loss of stock policy, I will take the what we call gross profit of last year, and gross profit of last year is given to us in the question as 2,50,000. This is gross profit of the last year which is given to us, isn't it or not? So I will write here gross profit rate of last year. Gross profit is 2,50,000 of last year. And sales of the last year is equal to 10 lakh. So I will write here 10 lakh into 100. That is equal to 25%. But it is important that you must not forget to apply the trend. The gross profit in the current year is declining by 5%. So you will simply subtract 5% because percent is given. Don't compute 5% of 25%. Percent will get cancelled and you will have to subtract 5. So gross profit rate you will consider 20% for loss of stock policy. So 20% of sales. Sales in this period from the beginning till the date of the fire is equal to 2,50,000. So my gross profit will be equal to 50,000. Now, I will simply balance and find out the amount of closing stock. What will be the amount of closing stock? 90 plus 300 plus 70 plus 50 minus 250. So my closing stock is 2,60,000. This is the balancing figure. Closing stock is 2,60,000. Just wait. Here you can see I have also computed here also. So in case if you do not want to note, you can simply look over here. We have computed gross profit rate 20% and 50,000 will be my gross profit and 2,60,000 will be my what we call closing stock on the date of fire. So we have computed the amount of closing stock. Is it clear to you or not? After having computed the amount of closing stock, now what we are supposed to do? So we have computed the amount of closing stock. This is step number 1 under loss of stock policy. This is step number 2, loss. Now next step is to compute loss of stock. In order to compute the loss of stock, what we do? We are going to write the closing stock as per memorandum trading account. As per memorandum trading account. If I am going to write here, what amount should I write? 2,60,000. And what is the salvage value in this particular question? The salvage value was nil. So your loss of stock will be equal to 2,60,000. That is equal to 2,60,000. Loss of stock is equal to 2,60,000. Is it clear to you? Now the next step is calculation of claim. Calculation of claim. We write closing stock and loss of stock policy. Now closing stock is 2,60,000. And given in the question that you have taken a fire policy of, it was given in the question that we have taken a fire policy of, that means loss of stock policy of 3 lakh. Loss of stock policy is 3 lakh. Insurance policy amount is 3 lakh. Correct? And because my loss is also 2,60,000, so what will be the amount of claim? That is 2,60,000 into 3 lakh divided by 2,60,000. If I will compute it, it is coming to 3 lakh. Logically, my loss is 2,60,000, so insurance company can never ever give me 3 lakh rupees. So this claim will be restricted to 2,60,000 because the claim amount can never ever exceed the loss of stock. So restricted to rupees 2,60,000. If you remember, in the initial stages, when I started this particular chapter, over there also I had mentioned this particular point, that in case if your policy amount is more, then you can straight away write that claim amount will be equal to loss amount. Correct? You could have written straight away without any calculation because policy amount is more than this amount. So your claim amount will be equal to 2,60,000. If you want to show it in this manner, you can show it. So this is one part of the question, loss of stock policy. Correct? Now we move over to the next step. And in order to move over to the next step, now we are going to find out loss of profit policy. This is second part of the question. B. Loss of profit policy. This is B part. Loss of profit policy. Under the loss of profit policy, our first step is computation of gross profit rate. Gross profit rate. Is it clear to you? However, for loss of profit policy, when we compute the gross profit rate, we take net profit of last year plus standing but only insured is standing insured charges of last year, and then we divide it by turnover of last year. Turnover of last year, and we multiply it by 100. Now in this question we have already seen that net profit of the last year is 50 and insured standing charges are also 50,000 and sales is equal to 10 lakh. So 50,000 net profit of last year and insured standing charges of last year are also equal to 50,000. And turnover of last year is equal to 10 lakh into 100. So that means 10% is my gross profit rate. Less trend, because there is a declining trend of 5%. So you will have to subtract 5%. So your gross profit rate will be equal to 5%. After this step, generally we compute adjusted annual turnover. Adjusted annual turnover means turnover of 12 months preceding the date of file. Now in this question, when I was preparing the diagram here, just pay attention. It is not clearly given in the question what is my turnover of 12 months preceding the date of file. Now pay attention. Fire took place on 1/4/2016. On 1/4/2016, fire took place. During these 3 months, my turnover is already given to me 2,50,000. So that means in order to compute the annual adjusted turnover of 12 months preceding the date of fire, I will start in a reverse manner. I will start in a reverse manner in the sense means I will have to move back from 1/4/2016 till 1/1/2016. Correct? That means in the current year, okay, I will show it in this manner. Presuming date of fire is here, and date of fire is 1/4/2016. An accounting year is beginning on 1/1/2016. During these 3 months, turnover is given to you as 2,50,000. It is given to you. Because we have to compute the turnover of 12 months prior to the date of fire. Correct? So, now, date of fire took place on 1/4/2016 and now we have turnover of 3 months preceding the date of fire. Now I need 9 months turnover preceding this particular date. So preceding this particular date, 1/1/2016 or 31/12/2015 will be considered one and same date. So if I will move back 9 months, that means I need to have turnover from 31st of March 2015 till 31st/12/2015, or in simple words, 9 months turnover. So 9 months turnover of last year, because in the current year, this period is lying in the current year. And 3 months turnover is already given in the question. So all I have to do is to now compute 9 months turnover of the last year so that we will have the turnover of 12 months before the date of fire. Now we know that turnover of the last year, full turnover of the last year is 10 lakh, it is given to us. So what will be turnover in the last year for 9 months? That will be equal to 7,50,000. 7,50,000. Is it clear to you or not? Is it clear? So that means the turnover prior to this particular date, turnover of 12 months prior to this particular date is equal to this much, no doubt about that. So total turnover is coming to 750 plus 250, that is 10 lakh. That means turnover prior to the date of fire is equal to 10 lakh. But problem is that we have to adjust the trend. It is given in the question that turnover is rising by 15%. So what I will do, I will compute 15% of 7,50,000. I will compute 15% of this figure, 1,12,500. But I will not apply the trend on 3-month sale. Why? Because these 3-month sale are of current year. That means these sales are already on the basis of raised prices, or we may say on the basis of what we call current prices, because these sales are related to current period. These are what we call sales of the last year. So these sales will move up by 15% in the current year. So that is the reason this time you are going to apply the trend only to the last year. So your total turnover of 12 months prior to the date of fire will be equal to this much. 8,62,500 plus 2,50,000. That will be equal to 11,12,500. 11,12,500. This will be your total turnover. After this step, we compute gross profit on annual adjusted turnover. Gross profit on annual adjusted turnover. Because your adjusted turnover is 11 12,500 and our gross profit rate is just 5%. So I will apply 5%. That is equal to 55,625. 55,625. This is my gross profit on annual adjusted turnover. It is also known as, so many times I have already told you, insurable profit. Insurable profit. That means these profits are insured for. And policy amount which is given in the question, is 1 lakh. That means this much of profits are insured against a policy of 1 lakh. Correct? After having computed this, now under the next step, generally we compute what? We compute short sales. For short sales, we need sales in corresponding period. Sales in period corresponding to disturbed period. Corresponding to disturbed period. Corresponding to disturbed period. Sales in period, that means in last year. And in the period which is corresponding to the disturbed period. Problem is that your disturbed period this time given to you as 1/4/2016 till 30th of June 2016. And you are given that in this period you have actual turnover of 87,500. But now this is the disturbed period. The same period I will take here now. Correct? Corresponding period, but which is corresponding to disturbed period. This is your corresponding period. But problem is that in this question, we are not given what is the amount of sales in this period, in the last year, because we are simply given that sales in the last year is equal to 10 lakh. Because it is not given, so I will simply take this is a period of 3 months. So during this particular period, we shall presume 10 lakh into 3/12 must be the amount of sales. Is it clear to you or not? Because this time sales of entire year is given to us, that is 10 lakh. So we will presume that sales are being made in a uniform manner. So during these 3 months, sales will be equal to 10 lakh into 3/12. So that will give us sales in the corresponding period. Is it clear? That is equal to 10 lakh into 3/12. Because your disturbed period is of 3 months. So in the same period last year, your sales must be equal to 2,50,000. Plus trend. Trend is 15%. Now I will apply the trend. 2,50,000 into 15%, that is 37,500. 37,500. Total is equal to 2,87,500. 2,87,500. Now I am going to subtract the actual turnover or actual sales in disturbed period. In the disturbed period, actual sales is equal to 87,500. So short sales must be equal to 2 lakh. Short sales must be equal to 2 lakh. Is it clear to you? So we have computed the amount of short sales also. We have computed the amount of annual adjusted turnover also. Gross profit on annual adjusted turnover is 55,625. All we have to do is to now compute a statement of claim or a statement of loss. For statement of loss, 1. Loss of profit. What is our loss of profit? What is our loss of profit? In the disturbed period, there are short sales of 2 lakh. Gross profit rate is 5%. So that means 10,000. Then additional expenses. For additional expenses, we have to compute 3 things. 1. Actual expenses. Actual additional expenses were given to us in this question as 60,000. Actual expenses are 60,000. B. Gross profit on increased turnover. Increased turnover. In disturbed period, DP, disturbed period, due to additional expenses. Now pay attention. In the disturbed period, we are having total sales of 87,500 and we incurred expenditure of 60,000. And nothing is given in the question that if we would not have incurred additional expenses, by how much our sales in the disturbed period would have been. So it is not given in the question. And I have already told you, if it is not given, in that case you will presume that if you would not have incurred additional expenses, your amount of sale would have been 0. That means whatever sales which you have incurred in the disturbed period, that is on account of what we call additional expenses. So we shall presume that whatever additional expenses which we have incurred, sales in the disturbed period took place on account of that. Sales in the disturbed period is 87,500 and gross profit rate is 5%. So we shall presume that due to additional expenses, sales in the disturbed period increased by 87,500. 4375. And then you will compute proportionate expenses, proportionate additional expenses. To compute that, we need gross profit, which we computed on adjusted turnover 55,625. 55,625. Write the same profit below. Gross profit on adjusted annual turnover. But add uninsured standing charges, which is 1,30,000. Now multiply it with actual expenses, that is 60,000. Correct? This figure will be equal to 17,980. 17,980. So out of these three, qualifying amount will be equal to 4375. So additional expenses which will qualify will be 4375. So your total loss will be equal to 14,375. 14,375. Total loss. In this question, nothing has been mentioned with respect to savings because we went through the entire questions. So no savings are given. Savings are not given. So your net loss of profit will be equal to 14,375. 14,375. This will be considered as your net loss. Is it clear to you? Now, after that, the last step is claim. Once again, you will write here loss of profit. First you write the insurable profit. Insurable profit means gross profit on annual adjusted turnover, which we computed 55,625. 55,625. And insurance policy. Insurance policy is 1 lakh. You have noticed once again that amount of policy is more, since policy amount is more, claim will be equal to loss of profit. Equal to loss of profit. Now what is your loss of profit? That is 14,375. So this is how you are supposed to do this particular question. Is it clear to you or not? I have also solved this question here. So everything has been given to you in a very detailed manner. Calculation of gross profit, we computed 10%, I told you how. And then decrease 5%, so effective rate will be 5%. And then sale of 12 months, I also made a diagram earlier. So 750 plus 250 we received, but I also told you we are going to add trend to only 7,50,000, correct? So total annual adjusted turnover will be 11,12,500. Then our what we call gross profit on annual adjusted rate will be equal to 55,625. And then calculation of short sales, 2,50,000 will be considered as sales of the period corresponding to the disturbed period. We will add 2,87,500, then 87,500 is our actual sales, 2 lakh is short sales, and this is how we have computed the amount of claim. Correct? So net loss is 14,375, and if you are going to compute the amount of claim in normal fashion, you will get 28,842, but it will be restricted to 14,375 as amount of claim cannot exceed the what we call amount of loss, sorry. So one more question is given, you try to attempt it by yourself, and only one more question, but generally questions from this topic are not asked, to be very honest with you. I have given you in a detailed manner, you can easily attempt this question of your own. Is it clear to you or not? I will simply explain the question. It is similar to the last one which we did. The company had taken out a policy both for loss of stock and profit without average clause. This time the policy amount has been taken without average clause. Correct? So if policy amount is without average clause, then while computing the claim, we will simply compare the loss with the policy amount, and lower figure will be the amount of claim. 2,10,000 and 3,20,000. Loss of stock policy is 2,10,000 and loss of profit policy is 3,20,000. A fire occurred on 1/7/2011 and sales were seriously affected for 3 months. So on 1/7/2011, fire took place, and trading and profit or loss account for the year ended 31st of 12/2011 is given, similar to the last one. So important point is that gross profit is this much, a closing stock of last year is this much, and your net profit is also given to you in this particular question. Further details are provided as follows. Now you are given some further details. It is given that sales from 1/4/2011 to 30th of June 2011. See here, it is clearly given in the question that a fire occurred on 1/7/2011. See, 1/7/2011 or 30th of June 2011 are one and same date. Correct? So, sales during the period is given to you 3,36,000, and I have below constructed a diagram also. for you for better understanding. Your current year is starting on 1/4/2011, correct? Obviously, it will end on 31st of 3/2011. From the beginning of the current year till the date of fire, this is the date of fire, correct? So during this particular period, your sales is equal to 3,36,000. In this particular period, it is given. It is also given that during this particular period, your purchases is equal to 2,14,000. So your purchases is equal to 2,14,000. Everything is given during this particular period. You are given that your wages were 51,000, manufacturing expenses were what we call 12,000. That means total direct expenses is equal to 63,000 during this particular period. So wages and manufacturing expenses combinedly equal to 63,000 during this particular period. It is given in the question. Other sales. Now other sales are given. That is from 1/4/2010 to 30th of June 2010. Now see here. This is my last year. My last year will start from 1/4/2010 and end on 31st of 3/2010. Now question says that from 1/4/2010 till 30th of June 2010, your sales is equal to 3 lakh. So that means during this particular period, correct, my sales were 3 lakh. During this particular period, my sales were 3 lakh. Is it clear to you? Last year I am talking about. This information is related to last year. Then question says that, just to confuse you, question says that from 1/7/2010 till 30th of September 2010, your sales is equal to 3,20,000. Now see here. Sales for first 3 months of the last year is given to you as 3 lakh, correct? Then question says that from 1/7/2010 till 30th of September or 1/10/2010 are one and same date. 1/10 or 30th of September 2010 will be considered as same date. So from 1st of July till this particular date, your sales amounted to 3,20,000. That means from 1/4/2010 till this particular date, 6 months have passed, and during the 6 months, your sales in the last year will be equal to 6 lakh plus 3,20,000, that is 6,20,000. And question has also given to you that sales in the last year in total is equal to 12 lakh. That means during the last year, your total sales is equal to 12 lakh. Total sales last year is equal to 12 lakh. It is given in the question. It is given in the question that sales in the last year is 12 lakh. Out of this 12 lakh, in the first 6 months, you had sales of 3 lakh and you had sales of 3,20,000 in the first 6 months, correct? In the first 3 months, in the next 3 months. So that means sales in the later period will be difference of this, that is equal to 5,80,000. Is it clear to you? That means sales from 30th of September till the end of the accounting year last year is equal to 5,80,000. So last year sales are given to you in this manner in this particular question, correct? And total sales are at your disposal. Now we come to the important point. Now question states that sales from 1/7/2011 till 30th of September 2011. Remember one thing. From 1/7/2011 till this date is our disturbed period. And in this period, sale is equal to 48,000, which is given over here. Sale is equal to 48,000 in this period. And period corresponding to this, and this is the what we call sale, actual sale in the disturbed period. And in the same period, sales in the previous year is equal to 320. That means this is corresponding period sale is also given to you in this question. Further, in this question, it is stated, similar to the last one, due to decrease in material cost, gross profit during 2011 was expected to increase by 5%. Gross profit is increasing. Only increasing trend of gross profit is given. 1,98,000 were additionally incurred during the period after the fire. Additional expenses are also given. Policy amount included 1,56,000 for expenses, leaving 42,000 for uncovered expenses. 1,56,000 is your policy amount. Is it clear to you or not? But this policy amount will not include uncovered expenses of 42,000. Now question says that ascertain the claim and loss of profit policy. Now in order to solve this question, first of all I am going to prepare the memorandum trading account in the current period. In the current period, 1/4/2011 is the starting date, correct? And this is the date of fire, 1/7/2011, first 3 months. Everything is given, I have written here. So sales in this period is 3,36,000. Last year's closing stock from trading account we can pick up, that is equal to 1,85,000. And then purchases I have written 2,14,000. Wages and manufacturing expenses are given. Now, last year gross profit rate, we will look into the trading account. In the trading account, 3 lakh is the gross profit and 12 lakh is the sale. So our gross profit rate of last year will be 25%. This time we will add 5% to total gross profit rate will be 30%. We will apply 30% to 3,36,000 to get what we call gross profit. Then we will have the closing stock as balancing figure. After having found out the closing stock, now we will compute the loss of stock. From this we are going to subtract the salvage value. Salvage value is not given, so your loss of stock will be 2,26,800. Now we will compute the amount of claim. In order to compute the amount of claim, policy amount is 2,10,000 and loss of stock is 2,26,800. This time average clause is not applicable. So we will simply compare the loss of stock and policy amount, and whichever is lower will be considered as amount of claim. So your amount of claim in respect of loss of stock will be 2,10,000. Now we are going to compute loss of profit policy. In order to compute the loss of profit policy, first of all, as usual, we are going to take into account net profit of last year, insured standing charges of last year, and sales of the last year. Last year's net profit, as per trading account, it is clearly given 60,000. Now, 60. Just wait. I am just trying to figure out whether there is any printing mistake or not. Just allow me 1 second. Okay. If we will look into the last year's trading and profit and loss account, we will see here administrative expenses is 83,600. And so many times I have told you administrative expenses are always of fixed nature. They are always of fixed nature, whether written or not. Similarly, in this question, selling expenses are given. Logically, selling expenses are always considered as variable nature expenses. But this time question has clearly written they are of fixed nature. So my total standing expenses will include 1,56,000. It will include 1,56,000. Is it clear to you or not? So total, if I am going to add both these things, it will be equal to 1,56,000. Now question below says that the amount of policy includes 1,56,000 for expenses. For expenses means 1,56,000 worth of expenses are insured. So 1,56,000 worth of expenses are insured. That means when I am going to compute the gross profit rate, the net profit of the last year is 60 and insured standing expenses will be 1,56,000. Is it clear to you? Insured standing expenses. That means all the standing expenses have been insured. And then it is given 12 lakh is the what we call turnover of the last year into 100. So 18% will be my gross profit rate. And it is given in the question that gross profit rate is rising by 5%. So your effective rate will be 23%. Now we are going to compute adjusted annual turnover of 12 months preceding the date of fire. Now we have seen that it is similar to the last question. It is similar to the last question. Turnover from 1/7/2012 till 31st of 3. First of all, we will take into account turnover of the current 3 months. The fire took place on 1/7/2011. So from the beginning of the current year till the date of fire for the first 3 months, turnover 3,36,000 is already given. And last 9 months turnover we can find out. See here, last 9 months turnover, how can we find out? If we'll move in reverse direction, then turnover of these 6 months is equal to 580 and turnover of previous 3 months is equal to 320 and first 3 months is equal to 3 lakh. But I need what we call of last 9 months turnover, 320 plus 580. So 320 plus 580, this is the turnover 9 lakh of 9 months of the last year. You leave aside the first 3 months turnover and take the turnover of the last 9 months, correct? Because turnover of the first 3 months of the current year is given. Annual adjusted turnover basically means turnover of 12 months preceding the date of fire. Because our fire has taken place on 1/7/2011, first 3 months turnover is 3,36,000. So we will take the turnover of the 9 months of the previous year now. That is 320 plus 620. So that is 9 lakh. 12,36,000 total. And in this question, there is no trend. So our annual adjusted turnover will be 12,36,000. We will apply gross profit rate, that is equal to 2,84,280. So gross profit, also known as annual adjusted turnover. Is it clear to you or not? Now we will compute the annual sales. Say calculation of short sales. As far as calculation of short sales are concerned, sales in the corresponding period 320 and sales in the dislocated period 48. So our short sales is equal to 2,72,000. Then we will compute the loss of profit. On short sales, we will apply 23% gross profit rate. Then additional expenses qualifying amount is 11,040, which you can compute. So total loss is equal to 73,600. There are no savings. Now we will compare this loss with the policy amount. And policy amount is 3,20,000 and loss amount is 73,600. The lower figure will be considered as this one. So this is how we are supposed to do loss of profit policy, correct? So next time when we will meet, obviously we will do the remaining section and finish up this particular chapter. So till then, it's time to say goodbye.